Got it. Did you want that? Is that yours?
What?
Is this yours?
No, it was here, and then it flew away. We are good to go.
Okay, should I start? Okay. Thank you, everybody. For our after lunch panel, we're going to be thinking about Web3 and the Metaverse. So this panel is entitled, Are the Metaverse and Web3 Hype, Real, and What are the Policy Issues? What is the relationship between Web 3.0 and the Metaverse? Are we in a hype cycle? Companies are investing significant resources in Web 3.0 and Metaverse and have routine announcements of new user experiences, innovations in payments, immersive gaming, and more. We're going to discuss these issues and ask what policymakers should know about these new technologies. So here with us today, we have Professor Hillary Allen from American University College of Law, Edward Bowles, Global Director of Public Policy at Meta Financial Technologies, the Honorable Caroline Pham, Commissioner at the U.S. Commodity Futures Trading Commission, Sujit Raman, General Counsel at TRM Labs, and Professor Kevin Werbach at the Wharton School, University of Pennsylvania Law School. So I just wanted to start us off definitionally, and if we could just go down the line, or as you want to talk about it, what is Web 3.0 and Metaverse? Are they the same? Are they different? How would you define Metaverse?
I'll take the rear end. Why don't you start, Kevin?
We're going to start at my end. Well, so what's great about these terms is nobody knows what they mean. They mean whatever people want them to. So they can be used in a very general way. As I think of it, to some extent, these are slogans about ideas. But there's some kernel of reality in both of them. Web3 is the idea of a next iteration of the internet, but it's fundamentally about a different business model. It's about business structures around users owning data and owning assets themselves, built on blockchain infrastructure, disintermediation, decentralization. So I think the idea of Web3 is it's the crypto space, crypto trading, but everything broader than that. Metaverse, I think of not really as business model, but as experiences. Metaverse is basically like the internet, but more so. Think about the experiences that we have being online, but much richer, deeper, more persistent, more expressive. And so that includes things like virtual reality and augmented reality, but also gaming and other pieces coming together. There is an area of overlap, which is open metaverse platforms like Decentraland and Sandbox are some of the early instantiations of this, which use digital assets, basically NFTs, non-fungible tokens, to represent the assets in the metaverse. So if I've got this hat in the metaverse, it could be an NFT that I actually own as opposed to just some code that is controlled and owned by the platform owner and then licensed to me. Whether or not that will take off and the difference between that and the larger metaverse is a really important, interesting, open question I'm sure we'll get to. I mean, Hillary will get us to the end telling us how this is all a fraud and a scam, I'm sure. But I think that's the point. These are overlapping ideas. They are not the same, but there is an area of convergence between them.
I would echo everything that Kevin has just said and really take a minute to focus on Web 3. Because I think it really is about a vision more than it is about particularity right now. I think there's a lot of sort of ideas about what Web3 stands for. So I'm going to throw out some words, and these are sort of the concepts that I think most people associate with Web3. It's a vision in which humans will reclaim their data, the internet, and essentially their anonymity from large outside forces, whether it's large corporate firms, whether it's government agencies. It's an idea in which the individual reasserts control over their information, who they are, and essentially how they exist in the world. So you are going to hear certain concepts like private individual control. You'll hear ideas like decentralization or disintermediation, as Kevin mentioned, or anonymity or pseudo-anonymity. You'll hear ideas about a more personalized experience of the internet through the use of machine learning or through artificial intelligence, so that, again, you are sort of stripped away from these centralized forces that have built the internet that we know and reduce or remove and sort of give that power back to the individual. There's an idea sort of underlying all of this of the absence of surveillance, right? The idea that these large outside forces, whether they be social media companies, whether they be the sort of pipes of the internet, not surveilling you and not having an idea of what you're doing through your user activity. So you'll hear again words like permissionless or trustless. These are all concepts that are intrinsic to Web 3.0. Now, with those new technologies come new risks, and I suspect we'll be talking about that as we go forward. So I would just leave you with this idea. I think Web 3 is a vision of data itself. It's an idea where data is everywhere at once, and also kind of centralized or decentralized and out of any particular individual or entity's grasp. Ultimately, that's what the vision of Web 3.0 is all about.
So first, I have to provide my disclaimer, not to break the flow, but the views that I expressed today are just my own and do not represent those of the CFTC or of any other commissioner. So this has been really interesting because I think already you'll see differences amongst the panelists, and so if you've got differences amongst the panelists, what does that mean for the broader ecosystem? My understanding of Web3 from all those who I've spoken with is that it really hinges upon this idea of an internet of ownership, which is similar in some ways to what Sujit has described, but that the key thing to unlocking the internet of ownership is digital identity. And so many that I've spoken to have said that in order for Web3 to reach its full potential, there needs to be an immutable digital identity that is secure, that has privacy, yet is able to be used to enable this internet of ownership. So I think that's one thing that's very interesting. With the metaverse, there are two different definitions that I've heard lately, and I've been out and about learning more about the metaverse and seeing it with my own eyes. I just returned from Seoul, South Korea, and was also previously in Singapore. And the two definitions of the metaverse that I find compelling, the first one is more broad. It says simply that the metaverse is a 3D internet. And indeed, that metaverse is here today. You can see that metaverse on gaming platforms like Fortnite or Roblox. My daughter plays Roblox. When COVID first started and she was 8 years old, she was spending all of her time hanging out with her friends virtually in Roblox, I think in a cat world, possibly. And so that's one conception of it. That does not require Web3. Another definition of the metaverse that I heard in Seoul from a CEO of a large gaming conglomerate is that the metaverse requires two components. The first is an identity, and the second is an economy. And that's what differentiates the metaverse from just another gaming world, is this idea of economy, of being able to earn, to own, to buy, to sell, to transfer, to use. And that, I think, can be accomplished without Web3, but Web3 would, I think, unlock its full potential in that you could use tokens and NFTs to demonstrate that ownership and that ability to buy, sell, transfer, and earn, and to transfer value between the metaverse and the real economy, so to speak.
Well, to tackle some of the postprandial torpor that I suspect is settling in, I'm going to do a bit of audience participation. Could those of you who have read Snow Crash please raise your hands? Okay, so a relatively small percentage. Snow Crash, published almost 30 years ago in November, by Neil Stephenson, coined the term metaverse for the first time. It's a fantastic read. I heartily recommend it to you. I don't think it necessarily represents what we're trying to build, for sure, but it's got extraordinary precipience when you think about what the knowledge that Neil Stephenson must have had at the time that he wrote that in terms of computing power that was going on. And the reality is Neil Stephenson is now in the metaverse business as well. He's just co-founded a firm called Lamina One, which is building payment rails for the metaverse. So he's gone from creating the term and fiction to actually now building with a number of other companies, real payment rails to do with the metaverse. For us at Meta, and I'll have to admit, obviously our name change did spark a bit of revitalization of interest in the phraseology and the terminology. We see the metaverse as something that is predominantly a physical, immersive, present experience. And if you've ever put on a 3D headset, to use the crude term, in our business, Quest 2, you would really know what that means. It's an extraordinarily visceral experience to be in a digital space with other human being representative forms in the form of avatars who are talking to you or talking to one another or taking part in some other social activity. I've attended a Billie Eilish concert in the metaverse. It was a novel experience. I wouldn't normally go to Billie Eilish anyway, but to go to see Billie Eilish in the metaverse was a truly novel experience and something that was radically different from standing in a mosh pit with a lot of sweaty other herberts, you know, in real life. I could leave when I wanted and without having to worry about it. I do think it's different from Web3. Infamously, perhaps, Elon Musk asked on Twitter, "I've been looking for Web3, where do I find it?" To which Jack Dorsey replied, "Between A and Z," which I think is a disservice to VC funding. I think VC funding's been an incredible driver of innovation in this space, but predominantly, you don't say, "I'm in Web3." You would definitely say you are in the metaverse.
All right, well, I've got my skeptics hat on. So I actually am going to agree with some of the definitional terms that Kevin used, that Web3 is an aspiration. It is not here. That it's something that is intended to be built on the blockchain, and that it is something that is intended to be centralized, decentralized, or disintermediated. The problem is that our experience with the blockchain already shows that that is just not going to happen. I have written at length about the different intermediaries who are involved in all kinds of blockchain businesses, happy to take Q&A about that, but you don't have to take my word for it. DARPA commissioned a report on the Bitcoin blockchain, concluded it was vulnerable because it was centralized. Tim O'Reilly has said that he's never seen anything centralized so rapidly as the Bitcoin blockchain. The Bank for International Settlements has said that it's a decentralization illusion in crypto. And let's be real, of course there are intermediaries to profit. Why else are all those venture capitalists pouring this money into it, right? Why else is Meta trying to get into this space? This is not, altruism, right? So we need to be asking ourselves, how do they propose to profit in Web3? And the idea seems to be that instead of just having regular crypto where it's all speculative transactions on tokens, it seems to be a way where we're trying to make a transaction out of every human interaction. And that by sitting in the middle of those interactions, Meta and venture capitalists and the startups that they fund can profit. So we need to be asking ourselves, do we really want an environment where every single interaction is transactionalized? We've got to think about what that does to the fabric of society. We also have to realize that the privacy claims in this space do not hold water. Right? On a blockchain, a public blockchain, you have pseudonymous records of every single transaction that someone's engaged in. Now we're going to make it every single interaction that someone has. Think about what that might mean for someone who is a victim of intimate partner violence, for example, to have, as soon as they can figure out their key, they can see every transaction that they have ever entered into, everyone they're interacting with. So these are questions about what this might do to how we interact that Meta needs to think through, and frankly, Meta doesn't have the best track record of thinking through these kinds of social implications. And so I think we need to be very cautious about this space.
So with that level setting, where we know what each other thinks of Web3 and Metaverse, I wanted to talk about the profit motive. So now we can go more into the weeds. I don't know how much people are following crypto, but the difference between a security and a commodity. So digital assets, there are so many different kinds of coins. There are ICOs. Are they securities or commodities? So I just wanted to kind of tee it up for our commissioner coming from the commodity space and maybe start that conversation.
So the important thing about digital assets is that it is really, really broad. It is an asset with a digital representation. That could be anything. That could be a financial instrument. It could also be a piece of real estate, a piece of art, pretty much anything that you can create a digital representation of. It does not even need to be necessarily on a blockchain. So let's just level set that as sort of the definition of a digital asset. In talking about crypto assets, which is on a blockchain and uses cryptography, which has caught everybody's attention, there's no question that some of those products are securities based on what they're being used for. If they're being used for capital raising, if they meet the Howey test in the United States and the definition of a security in other jurisdictions. There's also no question that some of these are payment products or are some type of banking product perhaps, and their prudential supervisors and bank regulators and the Basel Committee and the BIS are all looking at those products very carefully to guard against systemic risk and to ensure the safety and soundness of the financial system and financial stability. So what is fun about the CFTC's jurisdiction and the Commodity Exchange Act is that the definition of a commodity is so extraordinarily broad. It is pretty much anything, good, article, service, right, interest, pretty much anything except for onions and movie box office receipts. And the definition of a commodity also encompasses a security, actually. It's not something that people often talk about because it is confusing, but securities are actually also commodities. So the easiest way that I like to talk about this is that if something is not a security, then it's something that the CFTC probably has regulatory touch points over because of our broad anti-fraud and anti-manipulation authority over the spot markets, as well as in certain specific circumstances where we have direct authority over retail spot markets, for example, in retail FX and in retail leveraged commodity transactions. And Congress granted us that authority because of the number of scams and fraud involved in those two markets and the need for a full registration, licensing, compliance, risk management, and reporting regime around those two areas. So there's a role for everybody in the U.S. regulatory space. There are 7 federal financial regulators, and there's going to be a seat at the table for everybody.
Any other thoughts on digital assets? Securities, commodities, we'll find out, and stable coins, money market funds, the whole gamut.
Yeah, so whenever I talk to financial regulators overseas, I do a lot of workshops with them, they all say, God, you guys have a really fragmented regulatory environment. And this is an opportunity. There's benefits to the fact that we have so many different gradations here, but it's also a challenge when, as Commissioner Pham said, you have something this horizontal that it crosses over all of those boundaries. So just so people understand, if you're not familiar with this area, so far the SEC has said, essentially, that Bitcoin is not a security. So why is Bitcoin not a security? It's certainly not that it's not an investment. Because there's a multi-$100 billion market trading in Bitcoin. Today, there's roughly a $1 trillion market in speculative financial trading globally in digital assets, Bitcoin being the biggest chunk of that. So surely this is an investment market. It's an asset class. But there is no Bitcoin Inc. If I'm buying and selling Bitcoin, I am not, there's not some Bitcoin entity that is raising funds. There's 10,000 or more people, organizations around the world that are running nodes on the Bitcoin network. Now, there are lots of players that are making markets. There are exchanges like Coinbase and Binance and FTX that are centralized intermediaries, intermediating transactions. There's all kinds of financial activity, but Bitcoin is not a thing that is issuing securities to raise money in a venture. The SEC has suggested, although in a speech by a non-commissioner in 2018, that Ether, which is the token of Ethereum, second most valuable platform, also appears not to be a security. That's about all the commission has said, other than the fact that of the tens of thousands of other digital assets that have been created, the vast majority of them appear to be securities. So one thing is we need a lot more clarity here. Everyone sort of agrees on that. The problem is the industry say they want clarity, but they don't want a determination of what constitutes a security that goes more broadly. And even though everyone kind of understands much of what is happening here is either investment fundraising or attempts to circumvent, there is room for more than one regulator. The CFTC has some real expertise dealing with oversight of commodities markets. I testified in February for the Senate Agriculture Committee, which oversees the CFTC, with Chairman Benham and Sam Bankman-Fried of FTX, large crypto exchange. And what I said there was, if the goal of getting digital assets more into the CFTC is a regulatory get-out-of-jail-free card, if it's, well, this is a smaller agency that's not going to do real oversight about market manipulation, insider trading, front-running, and all of that, that's problematic, because these are massive markets, and these are investment financial markets. If, on the other hand, we have multiple competencies, and we can have shared jurisdiction and coordination between the agencies, we have that all the time in the government. Now, it's not perfect, but we have, for example, the FTC and DOJ coordinate about mergers and so forth. So we can do that, and I think unless we radically rip up and change the basic structure of financial regulation in the US, we're going to have to do that. But we need some more clarity. And the last thing I'll say is there's some obvious gaps. The CFTC has very limited authority over spot market transactions because it regulates commodities. And most commodities, think about oil, cattle futures, whatever, primarily derivatives markets, primarily things like futures and options. With digital assets, we have derivatives markets. We also have very big spot markets. And if these are commodities, the CFTC needs appropriate jurisdiction and appropriate resources. They need the funding to be able to have oversight of these markets. There's several bills that have been introduced in Congress. I think there's some good opportunities to work on. But we need to have more beyond that. Stablecoins you mentioned, we can get into later on. Digital assets that are created to track the value of the US dollar, to be stable. Problem there is, well, who regulates that? Is it under the Federal Reserve? Is it under the banking regulators? Is it under the CFTC or the SEC? Is it under the OCC? Is it under the FDIC? And so that's one where, given that stablecoins are a more than $100 billion market now, we need some better framing. So I've seen a lot of movement just in the last year of the digital asset industry. Many of the bigger players no longer saying, oh, don't regulate us, but saying, okay, let's come to the table and work out what this regulation should be, but we've got to go a lot farther in that direction.
Yeah. I'm going to go ahead and respond to some of that. Thank you for those comments. I think, first of all, it's important to note that the CFTC has been incredibly active and aggressive in the enforcement space. Just recently, we brought in an enforcement action for a Ponzi scheme in Bitcoin that was $1.7 billion. And because the CFTC, unlike nearly every other US regulator, has a global jurisdiction, we were able to reach misconduct that was in South Africa. The only other US regulator that has that type of global jurisdiction is the Fed, since they regulate bank holding companies, and the OCC to some extent because of banks and their foreign branches. So that's one point I'd just like to note. And the CFTC has brought over 50 enforcement actions totaling hundreds of millions of dollars in penalties since 2015, when the CFTC first identified Bitcoin as a commodity. And since that time, the CFTC has also identified Ether, Litecoin, Dogecoin, and a handful of other coins as commodities under our jurisdiction in our pursuit of fraud. We've also brought actions against crypto platforms and firms for being unregistered. And so I think anybody who thinks that the CFTC is going to take a light touch to regulation is confusing what principles-based and flexible regulation and a system of self-regulation is versus having a prescriptive regulatory framework that is not as able to keep up with adapting and anticipating new risks and new changes, whether it's a change in technology, a change in market structure. There are new derivative products being developed all the time. And I think that's why the CFTC, with its mandate to promote responsible innovation and fair competition, it's to keep up with the risks that commercial end users, corporates, dealers, and everyone else who uses our markets for risk management encounter. I'd also note that with the Dodd-Frank Act, the CFTC was given the jurisdiction over the nearly $700 trillion swap notional market and has built out an incredibly robust framework around swap regulation and swap dealer regulation. I used to be the global head of swap dealer compliance at Citigroup, among other roles, and it was a hard job.
So I'll jump in and say one of the concerns that people have about the CFTC having jurisdiction in this space is that the CFTC, unlike the SEC, doesn't have an investor protection mandate, right? The CFTC deals primarily with institutional players. That's the kind of market that they're used to, and they're great at market integrity in that space. But protecting sort of everyday investors has never been part of the bread and butter of the CFTC's mission. And so there's a lot of concerns about, in the crypto markets, which have a much more representative retail trader constituency than the regular commodity markets, that they might not be a great fit for that. Also, the CFTC is simply much smaller than the SEC, has a lot less experience in doing these investor protection areas. So Kevin mentioned some of the bills that have come out. One of the concerns about these bills is that they are carving out jurisdiction from existing, or at least some of the proposals, from the SEC and giving it to the CFTC. They're creating these special definitions of digital assets. Now, as the commissioner said, a digital asset can be anything. It doesn't have to be on a blockchain. And so sloppy drafting in this space, which is what I've seen in a lot of these bills, is a real problem, because what it allows is basically regulatory arbitrage, right? You offer a regular security, you know what, we'll call it, a digital asset is just a computer file. A blockchain is just a database, right? So you say, okay, well, we have a computer file on the database representing your security. Now it's not a security anymore. It's a digital asset. And now we can get away from the jurisdiction of the SEC, which has been a much more aggressive regulator lately. So I think there are a lot of concerns about these regulatory proposals to consolidate jurisdiction.
Yeah, I have to disagree and correct you. The CFTC has very strong retail protection mandates and enforcement actions. I just mentioned our spot retail FX mandate, where we bring dozens and dozens of actions pursuing fraud in those markets. We also have, for example, there's a lot of scams in precious metals. And so that's something where the CFTC has gone after that as well. The CFTC does not have an investor protection mandate because the CFTC does not oversee investment markets. We oversee commodity markets, which are used for risk management and for price discovery and for speculation. So people in our markets should know, and they do know, that when they are purchasing something, it is speculative. There is no 100% you're going to get your money back.
That's true
not
of
the way.
securities as well.
So for our markets, what we call it customer protection, because we want to ensure that anybody who's in our markets, whether institutional or retail, has the sufficient protections in place, from disclosures to some level of suitability requirements and other transparency measures. So I have to disagree with that.
I hesitate to insert myself into the discussion. But I would offer just one thought. The security versus commodity discussion is very important for the obvious reasons. But I think for many people in the industry, it's also a little bit academic. I think what most folks in industry are looking for is clarity one way or the other, because in the absence of that clarity, a lot of the innovation is being driven outside the United States. And where, the values of Web3 are being developed as we speak, you think about the Web 2, the internet as we know it. It's American values that suffused the internet as it developed in the 1990s and the early 2000s. And so all the concepts we talk about, free speech, open ideas, transparency, et cetera, no one is suggesting that the internet as it evolved is a beautiful, perfect thing. But we need to make sure as a society that Web 3 is similarly infused with those values that I think Americans and other allies prioritize. The danger is in the lack of that clarity. A lot of the financial innovation in this space is happening in other parts of the world that don't regard individual rights, individual privacy in the same way that we do. And so a lot of the innovation in the fintech space, in the Web3 space, is happening in a way that's actually quite scary. You talk about how China is already miles ahead when it comes to a centralized, a CBDC, which they are now exporting to other parts of the world in a very aggressive way. So this infrastructure is being built as we're speaking. It is part of the Belt and Road Initiative, and yet here we are squabbling within the United States about, is it a security or a commodity? I'm not suggesting these are not important questions. They are extremely important questions, but I just hope all of us collectively can kind of get our head above the fray.
So to step into this little battle zone here, to be fair, I think the US government has now realized that it was slightly behind the curve, right? And it, through the issuance of the executive order a couple of months ago, has sought to put some overarching narrative together to encourage its rather disparate agencies to be more aligned and to start to draw together a roadmap for how the US can resume its role as the leader of innovation in this space in terms of supporting what industry is doing whilst being aware of the areas where the industry might otherwise go off the rails and harm consumers and others. Now, part of the challenge is the likelihood of legislation coming off the hill is relatively low, and so therefore it does, in a sense, come back to the agencies looking at what existing powers they've got now to support and facilitate innovation in this space. There are some interesting opportunities, I think, for collaboration in a sandbox type way between industry and regulators, now that there appears to be a more pro-innovation agenda being adopted by the administration. It is also true, however, there are other jurisdictions, and Europe is one, where, as they did with GDPR, they've rushed out the blocks and they've created a new regional framework for markets in crypto assets, MiCA, as it's called. But MiCA's been driven, interestingly, I think, by a sort of European sovereignty which is partly anti-US, and the sense in which innovation in this space has been very much driven by US companies, and partly by the desire to crowd out private sector action, particularly in respect of an emerging class of currency, i.e. the digital euro. And what I think is encouraging to see anyway, and it is true in the US, is the recognition that actually the US can innovate too in a public sector sense, i.e. it should look at what the role of a digital dollar might be in an increasingly digital commercial environment, and including in relation, I would say, to the metaverse. And so there is an interesting opportunity now for US authorities to work together more with industry rather than just working against bits of industry.
Well, it's interesting that you mentioned the executive order, because I've been quite critical of that, because I think the major fundamental flaw of the executive order is that it just assumes that all innovation is good, right? It doesn't take a critical approach to think, well, why are we even doing this? Because when you get down to it, blockchain tech is pretty bad, right? So to try and achieve decentralization, things have to be inherently inefficient, clunky, wasteful. Otherwise, it's too easy for a bad actor to take over. But then it doesn't scale very well, and so we're adding the intermediaries back in, and we're getting the worst of all worlds. We're getting sort of this clunky, decentralized sort of quasi-technology with intermediaries layered over them. And there's a lot of negative consequences of this technology, right? I mean, it has spurred an entire sort of new industry of ransomware attacks. It has major environmental costs. If you look at what proof of work mining does, the blockchain for Bitcoin alone uses as much energy as an entire country like the Philippines or in the Netherlands, or at least it did until this sort of crypto winter. So, you know, and then people are getting hurt. People have lost their life savings. You know, there are suicide hotlines posted at the top of crypto threads. Is this really the innovation that we want to be leading the world in, right? Let's stop and think, like, is there anything really useful about this technology? And I understand you can't always predict that from the get-go. And, you know, if there were no negative consequences, sure, go nuts, keep tinkering with this, see if you can find something. But when the writing's on the wall that this is fundamentally flawed technology, and, you know, again, don't take my word from it, there's a letter at concern.tech signed by over 1,700 technologists around the world saying this technology is bad technology. When the writing's on the wall and the negative consequences are so bad, we need to just stop and think about whether we want to promote this in the first place, at least have that conversation. And that conversation has been entirely missing from the administration's approach to this, which I think is a fundamental flaw of the executive order.
No, but the executive order tasked a whole variety of agencies with doing reports, including OSTP, NIST, and others, doing reports on things like the energy usage and so forth. That, you know, Hillary's absolutely right that blockchain technology has been overclaimed and overhyped. And it is not perfectly decentralized and everything. And there are real questions about the viability and scalability of many of the use cases beyond financial speculation. So no question. To say that it's all inherently non-functional, that it's inherently bad, there is not one thing called blockchain technology. It's sort of like saying, is internet technology good or bad? Well, what is internet technology? Are we talking about the TCP/IP protocol? Are we talking about packet switching? What part? I mean, people here know about all the different pieces of this industry, and the way that that looked 20 years ago or so when I was at the Federal Communications Commission is different from the way it looks right now. Same thing with blockchain. This is a set of engineering approaches where there are a variety of different systems that are being built. Bitcoin is one instantiation that has a certain value proposition, certain pros and cons. Ethereum is another. Ethereum was not designed for payments. Ethereum was designed as a platform for decentralized applications. And there's a whole ecosystem getting built up on top of it. And those are just two. There are systems that are being built, for example, to the question about privacy, to protect privacy. Mike Mosier, who was the head of FinCEN, the anti-money laundering regulator of the U.S., is now general counsel of a company called Espresso Systems, built on some academic privacy work using what are called zero-knowledge proofs to protect privacy while also being consistent with anti-money laundering. I see tons and tons of smart people around the world who could do whatever they want. And we're not just talking about VCs. We're talking about people who say, where is the cool opportunity for innovation? They say, I want to go work for a DAO, a decentralized autonomous organization. They say, I want to explore these possibilities. Now, is there bad stuff? Is there hype? Are there VCs that are scamming people? No question. But I think we should be careful about making these generalizations at that level. We certainly should agree it's not all good, but it's not all bad.
As we see more innovation happening and capital going in, maybe, Suji, could you tell us a little bit about TRM Labs and the layer of infrastructure that you're building and the clients that you have?
Yeah, I'd be happy to. So TRM Labs is a leading blockchain analytics firm. We're an early stage startup, Series B, have attracted a fair amount of venture capital funding, which is great. But really, we are the picks and shovels of Web3, right? We're the digital infrastructure that helps different verticals, whether it's governments, whether it's financial institutions, or whether it's crypto native entities like exchanges, to essentially assess the risk of what is happening on the blockchain. So let's say you've got a particular cryptocurrency wallet that you potentially want to interact with. You would use TRM's tool to get a sense of whether or not a sanctioned party has interacted with that tool, with that wallet. So what we essentially do is help create integrity in the broader sort of Web3 crypto ecosystem. You know, what's really interesting about the kind of work that we do is we are sort of analyzing raw blockchain data and then building intelligence on top of that through open source investigation, through our own investigation. So we really are kind of a neutral player in the ecosystem. And our goal is to, again, help outside parties identify fraud, scams, you know, bad actors, terrorists, sanctioned parties, to make sure that this infrastructure that we're building is sort of focused on good actors rather than becoming a haven for North Korean hackers or, you know, other illicit actors.
Thanks. And going with that same theme about just activity in this space, Edward, would you mind talking about the Metaverse, the standard setting body?
Well, if you don't mind, I'll do two things, because I'm quite concerned that Hillary is leaving everyone with the impression that this is all a disastrous exploit. Some of you may have seen the news reports about 10 days ago of the conjoined Brazilian boys, these 2-3-year-old twins, who were separated after some 27 hours of surgery involving 100 different medical practitioners, including those who were taking part from London in the surgery that was happening in Brazil. But that surgery was prepared using virtual reality headsets over a 2.5-month period. That they built a 3D image of the children's brains, blood systems, vessels, how the skulls were joined and where the operation was going to take place. And they trained the surgeons over a period of months as to how that was going to take place. And the mere fact that that sort of thing can happen now is an extraordinary example of, I think, innovation in this space, which is yielding some incredible public goods.
And just to be clear, I have no quibble with virtual reality. My quibble is the blockchain.
That's charming. And to take a second example, something that I participated in only 3 weeks ago, is an entirely new genre of film. So VR Heroes, which is a Polish film company, built a camera that films in 3D for the entirety. And the first film that they've made, which is now starting to be viewed again using the Quest headsets, is about the Warsaw Uprising. And it's an extraordinary experience, a very visceral experience, to find yourself as a first-party participant in a virtual reality film that is, in fact, a true record of something that happened in relatively recent history, in which one of the colleagues who I watched it with, who was a Ukrainian national who sat beside me and watched it at the same time, both wearing our separate headsets, was an extraordinarily profound and real thing that's happening right now to her and some of her families. But back to your question in terms of the metaverse. Just remind me what the question was.
The standard setting body that you're a part of. And then I'll have one audience question as well.
Yeah. So the metaverse is only going to achieve the true scale and opportunity if there is interoperability. So we have built something called Horizon Worlds, which is just what we're building. But we would like that to be connected to others, and for people who are creators in the metaverse, who are building digital assets, to be able to have those assets moved from one world to another. And so approximately 6 weeks ago, we, together with about 40 other international organizations, some of which are standard setters, some of which are other actors, Microsoft, IKEA, the furniture shop, go figure, I don't know why, got together and created something called the Metaverse Standards Forum. And in the 4 weeks or so that followed that, more than 1,000 other organizations joined it. Why? Because they see the opportunity of helping to try and shape the standards that were a bit like HTML when it was developed, in plugging together different disparate groups within the sort of Web 1 part of the internet. And so that will be the key to unlocking, I think, the economic potential that sits behind true crypto investment opportunities for particularly self-employed and other creators, and indeed driving different sorts of innovation that I think America, frankly, should be very well positioned to take advantage of.
Great. Well, just to head into audience Q&A, I thought I would take a poll among this audience about if you're pro-crypto or skeptical crypto. So, you know, we try and have balanced panels, and this is a crowd of lawyers and economists. So just as a poll, raise your hand if you are gung-ho crypto. Or both, okay.
Be both.
Skeptical or both. Okay, great. So I guess that's a good segue into audience questions and how our panelists can answer your questions. Okay. Hi, Julie.
Hi, Sarah. Thank you very much. That was a great panel. So my name is Julia Wano. I'm on the Meta Oversight Board, and although I'm thankful to the panel for the very great, explanations, I still feel like we haven't talked about the elephant in the room, which Professor Allen has tried to discuss, which is, of course, this is all very exciting-ish, but there is also a lot of concern based on recent history. So my question to the panel is, what are the safeguards that should be, of course, I'm not asking for an exhaustive question here, but response here, but what are the main safeguards that we should keep in mind when building this new innovation? Whether it's Web 3 or Web 4 or Web 5, actually, I don't care. But the question fundamentally is, how do we think through and build infrastructure that is interoperable and all the very beautiful things that we've discussed, but from a safety perspective? So basically, can we transfer rather the safety concerns and rules and safeguards and principles around rule of law, democracy, all of the things that have protected our societies in the real world, how do we transfer them in the metaverse and other type of innovation? I would like to hear your thought on that.
This is a really important question. I'm glad that you've asked it because there are very real risks involved with this type of technology. And if indeed that's with blockchain technology, there's very real risks that we've seen. And that's why regulators all around the world and within the United States are in fact working together through international standard setting bodies and through other initiatives to promulgate principles, which I've actually described in my 10 fundamentals for responsible digital asset markets, to guard against systemic risk, to ensure that the activities within the regulatory perimeter, that there's minimum financial requirements and risk management requirements. But the broader question that you're pointing out is that if we're going to be living our lives in the metaverse, we need all of the same protections for users that we have today, that we are struggling with today. And many of the debates around tech policy and around the use of the internet can be maybe even more magnified in a metaverse. If we're concerned about cyberbullying today when it's words being exchanged, what if you're in the metaverse and somebody is virtually physically threatening you? So I think these are really important questions that deserve careful thought and study.
If I can offer just an additional thought there. I mean, it's a wonderful question. And I think many people who are in the industry are themselves trying to figure out the right answers. I'll give you an example just because it's top of mind, because it's something, I mean, I've just been dealing with over the last few days. Many of you may be aware, OFAC sanctioned Tornado Cash just a few days ago. Tornado Cash is essentially a smart contract on the Ethereum blockchain that allows people to essentially mix their ETH transactions, so that, we talked about the immutability of the blockchain earlier. So one way to try to preserve privacy is to essentially create these intermediaries where you can mix up your transactions, and thus it gets harder to trace where A sends money to B, right? So that's a privacy-enhancing technology. It also happens to be a technology that the North Korean government was using to launder hundreds of millions of dollars from recent hacks. So, we're confronted with a dilemma. This new technology, on the one hand, has created opportunities for privacy protection that just didn't exist, right? This just wasn't there before. That's a wonderful thing. At the same time, it's created opportunities for a rogue regime that is under international sanctions everywhere to essentially raise money for its weapons program, which is also happening, right? So how do you deal with that? And those aren't questions that we have answers to. How do you protect privacy in this new kind of era where, the blockchain does have an immutable ledger that cannot be erased? So you want to create technology that helps, and yet that very technology is now being, abused. And now we have OFAC jump in the fray, and with its sort of, traditional IEPA authority that was developed in the 1970s or 80s, sanctioning a smart contract, which had never happened before. It has huge implications. But I'm not sure that discussion happened within the government, and now it's happening, in the public. And all of us are kind of just stumbling our way through. So it's a great question, but unfortunately, I don't think there's a neat answer because the technology is so novel.
Great, yeah.
Actually,
Yeah,
I have the microphone, so I was just going to ask my question. Jennifer Warren, this is a really interesting panel. My question, though, focuses on the fact that this is really a global challenge. This is not a set of U.S. regulators only. So what is the nature or plans for any sort of multi-stakeholder dialogue that is international in scope, kind of when you look at what the Internet Governance Forum did to try and educate and socialize and bring disparate countries together with their citizens? Have you guys had that conversation about the value of that kind of approach? Thank you.
So I can say that that's actually happening a lot already with the financial regulators. So there's a long tradition of cooperation with financial regulators because the financial markets are cross-border. So there actually are already a lot of forums, and they're putting out a lot of research in this space, and there's a lot of discussion and coordination there.
Yeah, it's more multilateral than multi-stakeholder to this point. And partly it's because we're just working through the issues. And most of the, for example, the financial regulatory issues, those are clearly issues where financial regulators have to decide what to do. You don't have quite the same push and pull between governments creating the infrastructure and controlling the infrastructure versus the kind of bottom-up approach that we had with the internet. But there's no question we need to go there. And there's a big challenge in this area. When the internet came about, and Jennifer, you and I, and a lot of people here were around when these debates were happening. 20 years ago, virtually everyone on the internet was here in the United States, and this was the centerpiece. And then it grew up in other places. The blockchain phenomenon is truly global, and different countries are approaching it in different ways. And also, we have entities that are basically nowhere. Binance is the largest crypto exchange in the world, nominally by a factor of 8. 8 times bigger than any US-based exchange. It, I think, as of now, claims to be domiciled in the Caymans. It's not regulated by anyone. And that's a huge problem. Tether, which is the biggest stablecoin, again, asserts that it has some oversight in the Bahamas or someplace like that, but essentially, and asserts that not only does it do no business in the US, it does no business with anyone who does business in the US. That is simply not true. And yet it's a challenge to go after these entities. So, that's not your question. That's not about multi-stakeholders, that's all about multilateralism and cooperation on enforcement. But we've got to get over that hurdle. The good news is, there is a recognition that this is global. And as Hillary said, at the regulator level, the government level, a lot of the international organizations like the Financial Action Task Force for anti-money laundering and so forth are doing a lot of work in this area. But we don't yet have a vehicle for the kind of multi-stakeholder. I think it's a little too early, but you're absolutely right to pose the question. And I think most people that are in these debates, I don't think see the challenge that is why multi-stakeholderism came about in the internet.
Yeah, I think to provide a specific answer to your question, for the technology and data policy issues, the engagement, and there's a lot of engagement in the international community around this, between different ministries and governments. It's led by the State Department, some part of the Commerce Department, and also the Treasury Department, which the data issues have been very important, particularly cross-border data issues over the last several years, and that's where that discussion's happening.
My question really asks you to go beyond the mere international and global dimensions of the metaverse. What about the metaphysical implications of the metaverse and the increasing disintermediation, decentralization of human bonds and the impacts on society and democracy? You know, if bowling alone was a problem of several decades ago, virtually bowling alone is going to further disrupt the bonds, you know, that keep us together and further accelerate the trend towards tribalization and echo chamber. Our academics, our companies, our regulators, applying philosophers and sociologists and somebody else to make sure that some of the pathologies that we've seen with the plain old internet is not going to be quite as bad as Internet 3.0 and the metaverse.
I'm happy to give it a go. The reality is we're already living, because of COVID, in a situation whereby I don't think there's ever going to be a return to the level of normality that we saw before. I don't know what, on average, occupancy rates of offices are around this sort of gathering of individuals, but I suspect it's well below 50% and will probably remain consistently like that. So the question is, how can we assist if we're going to have this persistent factor of people working remotely by choice now, because they actually prefer the work-life balance, they prefer to live somewhere where they want? How can we facilitate that? What are the means by which we can bridge that connectivity gap? And from the company's point of view, one of the ways we're trying to do it is by simply plugging people together with bits of hardware, such as the headset, as a means of trying to bring people together in a more quasi-present manner than is otherwise going to be possible because people are going to be continuing to work remotely. And so, I think this is a meaningful challenge, and it's one that I think technology offers an opportunity to try and overcome, but it's not without the risks and challenges there.
What you describe is something that keeps me up at night. It is something that I'm very concerned about because as people increasingly align themselves to communities that don't align to national borders or familial bonds or their physical communities, with all of this opportunity comes great risk, and the national security risk in particular is something where, what if you end up with these non-state actors and they have their own currency? What if in a future world we have one financial system that's based on the US dollar as the reserve currency, another one that's based on the digital yuan, and then a third one that's a non-state currency? And what does that mean? And what does it mean if we have conflict in that, where people are aligning themselves in such a way? So, not to be alarmist, but what if we have a Al-Qaeda in the metaverse or something like that, right? So it's a very important question.
I'm sure we do.
Great, maybe one final question. Do you want to go? Yeah. Okay.
Thanks so much. Hi, I'm Jonathan. I'm with R Street Institute. So, we talked a lot about blockchain, about the metaverse itself, and I feel like there's a lot of applications with blockchain beyond the crypto, the NFT, that, we're barely skimming the surface as to the utility of what that technology can provide. So a lot of the pitfalls that, you've raised and the concerns raised about the technology, as the technology evolves, presumably a lot of those issues will go away, new issues will come up and those challenges. So how are we working to work through a lot of those challenges to address that? Because, this is a technology that's here to stay. So how do we embrace and evolve that technology by protecting privacy and a lot of these other things that are kind of emerging as we learn more?
So something that's interesting about your question is that it's really hard to get anyone to pin down a use case for this stuff. There's a sort of a cottage industry of interviews with VCs trying to come up with a use case for the blockchain. And, sometimes you hear micropayments, and that just doesn't make sense because micropayments don't work right now because they're too economically costly to do, right? And so what, you're going to replace it with the blockchain that is more cumbersome and more expensive and slower? Like, that doesn't work. Or you hear mortgages, like, oh, we'll just put mortgages on the blockchain and that will fix, the mess that is the US's mortgage system. What the people promoting this technology are very good at doing is diagnosing real structural problems that we have in this country. But then technology won't fix structural and political problems. You need structural and political fixes. And so I actually, disagree with the premise that there is, a lot for this technology to even do. I think we need to focus on the structural and political problems in the first place, and then you can replace it with centralized technology. As I said, there's lots of good technology. I'm not, anti-tech. It's just this particular type of tech doesn't work very well. So let's think up the simplest centralized solution to the problems that we have and then fix it.
Yeah, we're at the end of the panel, so I don't want to get into the back and forth, other than to say that's an open question. What's the technology going to be like going forward? It has a lot of potential, has a lot of limitations, and again, there are many different implementations. And people talk as though there's this decentralized Web3 world and this perfectly centralized Web2 world. I mean, what is Facebook? Facebook is not like one thing. Facebook is tens and thousands of servers, hundreds of millions of servers all around the world. It's incredibly decentralized. And yet, in some ways, there is central control over it. So it's really easy to generalize about these things. The real question is, what are the incentive structures going forward? How do we know the answer to your question? How do we get empirical data? There are use cases out there. There's lots of enterprise use cases of blockchain right now that are at small scale, and we have to ask the question, are they better at scale than the alternative? Good question. We need to watch that going forward. The question is the innovation going to happen in a way that is driven more towards exploring those spaces and less towards scamming people, fraud, speculation for speculation's sake, and all the abuses? And that's where regulation has a really important place. But no, we shouldn't assume that the problems are going to go away. But at the end of the day, I think these distinctions are not going to matter very much. I mean, at the bottom of a lot of blockchain is cryptography, and you can employ cryptography, and cryptography does get employed widely in other kinds of technological platforms. And at some point, if we look back, it's like sort of saying again, what's the line between internet technology and non-internet technology in the world today? Really impossible to draw, and there's not a point of drawing it. It's part of this overall ecosystem. I agree with your premise, though, that this is not going away. This set of technologies and activities, Metaverse, Web3, blockchain, that is going to be a part of the future. Of that, I have no doubt.
Well, I just wanted to say thank you to our panelists. We're at the end of the hour, and this is a great conversation. Technology policy, years to come, we'll be discussing it. And please come back at 6 o'clock. Thank you.